Resource Watch is brought to you in association with Tebe Investment Corporation.
The oil price is top of mind in the resources space. It reached $116 a barrel with supply concerns coming out of Iraq. Investors are worried that Islamic militants threatening to take control of northern Iraq could extend its reach to the south and cripple oil production in OPEC's second largest exporter. This week, fighting shut down the country's biggest oil refinery. This is Resource Watch, and we'll be looking at the global repercussions of a high oil price. I'm Nozipho Mbane. Let's kick off with a look at stories making headlines.
There's still no end in sight for South Africa's costly 21-week platinum strike. Miners, Lonmin, Anglo-Plat and Impala say Union AMCU has added new demands beyond their earlier agreement in principle. The producers say the new demands amount to an additional 1 billion rand, which they cannot afford. Engagement with AMCU is ongoing. South Africa's energy sector is set for a shake-up which will see nuclear and shale gas playing an important part in the energy mix. President Jacob Zuma says the country's energy security is a key priority, with a need for a sustainable mix which would include coal, solar, wind, hydro, gas and the fast-tracking of nuclear energy generation. And gold buyers and sellers across the market will hold a discussion next month to explore ways to reform or replace London's global price benchmark known as the FIX. This was announced by the World Gold Council and comes as gold and silver fixes, along with other commodity benchmarks, face increased scrutiny by regulators in Europe and the US.
It's no surprise that the latest conflict in Iraq, which just happens to produce nearly 3 million barrels of oil per day, 80% of which is exported, has sent jitters across the world. Today, I'm joined by Bevan Jones. He's the Chief Executive Officer at Tebe Resource Incubator. Bevan, lovely to have you.
Hi.
Let's start off with some of the domestic pressures that are causing Iraq to be in a space where they are impacting on the oil price.
So I think what you're seeing is the north of the country is obviously being exposed at the moment. You're seeing the terrorist groups, etc., having taken over the Baija refinery, which is up in the north. Now Iraq produces two crude oil grades. One is Kirkuk, which comes from the northeast region, and of the 3 million barrels a day that you talked about, the supplies have actually stopped since March of the Kirkuk grade, but that's about possibly 0.5, if that. The other is Basra Light, which comes out of the south of the country, near Basra, and that's where most of Iraq's oil is exported. Now, of course, those supplies haven't been affected, and those fields are owned by the majors as well as the SOMA, which is the state oil company.
And so on the markets, we're seeing the oil price at the highest levels that we've seen in 2014. How much further are we likely to see this trend continue?
Well, I think the markets have baked in a lot of what's happened over the last week. We saw last Monday and Thursday with the big price moves. I think that there's fear out there. There's fear that what's happened in the north could spread to the south and could start to affect the Basra oil supplies. But again, what we're seeing is we're now seeing engagement with Iran being fast-tracked by the UK and by US governments, and that could actually lead to a bit of a bearish scenario if, for instance, sanctions on Iran were lifted and we saw more supply coming out of Iran. Iran obviously being quite key in the region to try and help stabilize that area.
But you've touched on one of the options, and Iran being one of them. What about other oil-producing countries? I know Saudi Arabia could likely buffer some of that supply.
That's right. So Saudi obviously produces about a third of the world's oil supply at the moment, and really being the major producer in OPEC. Saudi has picked up supply recently to counter some of the losses out of Libya. There's less oil coming out of Libya as well, and obviously Saudi's watching the situation quite closely. If they feel they need to step up production to offset any losses coming out of Iraq, they'll do that.
Is Libya a real player? Could Libya really make a difference in this particular scenario?
No, I mean Libya is one of the key oil producing members in OPEC and in the region. Iraq's obviously a major producer, but again, as we've said, most of the supply coming out of the south.
Let's bring it back home and let's talk about implications for South Africa and in particular for consumers who are watching the petrol price like a hawk.
Sure. So obviously, I mean, our petrol price is impacted by the basic fuel price, which looks at the market prices for things like diesel and petrol in Singapore, in the Arab Gulf. And of course, these market prices are influenced by the Brent oil price. So as Brent oil rallies, you're seeing diesel and petrol rallying as well. So obviously, we're going to feel that impact in the dollar terms, and we're also feeling the impact from the weakening of the rand against the dollar. So we will see petrol price increases coming through. Unfortunately, Brent is exposed because as the price of Basra Light, for instance, or the price of Saharan blend out of the Middle East, as those prices rally, Brent prices will rally as well, just in sympathy, etc.
And just earlier we were hearing that the President in his State of the Nation address focusing a lot of attention on the energy mix in South Africa, touching on shale gas and nuclear. But what options does this open up for consumers in light of the fact that we're likely to see prices tick up?
So the one thing South Africa obviously has an issue with is that we import all of our crude oil and we import all of our refined products. Most of those come through Durban. We have the refineries in Durban, the Engine refinery and the Sapref refinery, which is the Shell and BP refinery. And yes, we're very exposed to international prices. And for our balance of payments, it's not fantastic either because we're importing these expensive refined products. So one thing that would really be useful for South Africa is to develop a biofuel sector where we can look at alternative fuels coming into biodiesel and bioethanol, and there's certainly a lot of local opportunities that need to be developed. Tebe is quite involved in some of those, and looking at alternative sources of energy.
But there has been a lot of talk about biofuels in South Africa, and something that doesn't seem to be new right now. Being an insider in terms of the industry, let's talk about some of the prospects for the industry. Is the legislation enabling? Is it something that's a real possibility?
I think the legislation is enabling. It's just obviously there are huge issues. There are issues around blending. There's issues around the transport infrastructure. The same thing when you look at gas or shale gas. We really need to develop an infrastructure to enable the distribution of natural gas, etc. Natural gas going for power generation, or natural gas going into compressed natural gas or liquefied natural gas for fuel. I mean, you're already seeing a lot of taxis driving with LNG, natural gas at the moment. So it's certainly, once the supply is there, the end users, the motorists, will certainly take it, especially if it offers a cheaper alternative. And we have those opportunities and we need to develop them.
What about opportunities outside of South Africa's borders? Are we seeing Africa coming to the fore in terms of exploration, granting of licenses to really bring some of that gas into markets?
Both gas and oil. So we're seeing a lot of excitement. Africa's really seen as the last frontier in terms of oil and gas exploration. So what keeps the chief executives of Shell and BP up at night is finding new reserves to replace their reserves that they're depleting. So you're looking at places like Namibia, which is seeing a lot of offshore interest in the Orange River Basin. You're seeing even offshore in the Wild Coast, offshore Durban, ExxonMobil coming in with local companies to explore for oil offshore. Onshore, you're obviously seeing the shale gas and coal bed methane, etc., biogenic gas in the Free State gold mines. All of these gas opportunities are being developed at the moment, and the legislation is enabling. It's quite punitive in that government is seeking to take a 20% free carry and then up to an 80% negotiated buy-in at a market rate. But still, that's the market is seeing that as a positive thing, that government is at least engaging and providing a framework to develop this. So we are seeing Africa develop. Mozambique, certainly, we're seeing the Pande Temane gas fields being developed, and further north as you go up to Pemba. Mozambique has huge onshore gas reserves.
I mean, if we turn quickly to the east of the continent, in particular Kenya, the concern has always been that these finds are not viable to bring to market. How big is this concern? Is it an isolated Kenyan problem, or are the oil and gas reserves in Africa under big question mark because they're not feasible?
I think they're different types of plays in terms of the types of reserves that are being found. You're seeing oil reserves coming from the Rift Valley, etc. And people didn't think there was oil there. Now they do believe there's oil there. These fields are never going to be as big as the Saudi fields, etc. But they are viable. It's just that the cost of production is obviously scaling up.
Yeah.
So that means obviously that the cost of oil worldwide is slowly but surely going up, because it's getting more and more expensive to find.
What can we expect as an outplay in the global markets right now?
Well, we've seen Brent and the key market prices obviously rally on this news. Volatility in terms of implied volatility and so from the traded options market has certainly shot up. I mean, we've seen that push up to sort of 40%. Historical volatility is still tracking at about 30%. But we're certainly seeing people pricing the fear into the market at the moment. We're seeing Brent at about 115, 116. It could rally to 130 if something did happen to break out. But again, whether that happens or not, it's anyone's guess.
It's anyone's guess. That's according to the Chief Executive Officer of Tebe Resource Incubator, Bevan Jones. Thank you, Meg, so much for making the time to join us.